Many people are in an uncertain state because gold had broken out many major forms of support. We also had monthly engulfing being created here and it's being tested. You also had stuff like this level being broken out from price broke this level, price also broke a bunch of daily levels. And now we've had a bunch of tests of this weekly SBR level. People are, and I still have a position up here, and it's risk free, but with all these pushes up, people are doubtful and they think that price actually wants to come back up here. So it's a little bit messy. If we go into the daily, you'll even see what I mean by this. You have this huge daily range here. It is approximately a 500 point range. And quite frankly, a lot of people have the potential of blowing their accounts playing in this range. So again, it starts to create a lot of fear and doubt and uncertainty. Um, I don't know if you guys pay attention to fundamental stuff, but all the news that's been released out this week points towards gold to be in the bearish direction, right? So one thing you have to keep in mind is that whatever goes down must go up first. Whatever goes up must go down first, right? Um, this is my theory and my understanding of what's going on right here. Just this is side knowledge, but if you guys are wondering that gold is bearish, why is gold pushing up? Why? So you have to look at this diagram and you will understand what I mean by this at the moment. So because gold is in a bearish market, I will do a bearish example. And I'm gonna bring this up many more times in the future because it's something people really tend to overlook, but I think it's going to be very foundational to your understanding of the overall creation of what an actual candle is. People just see, some people just view this candle as just a candle, but they don't really understand that there is actually some more details that need to be put in consideration, right? So you have your open, high, low, and close. The general rule is, oh, excuse me, the general rule is if you're bearish, price needs to go up first, and then it needs to create a low and then close. So if we put it in perspective, market opens up here, pushes up, goes down, creates closing price. Now, this is bearish. I put that in writing. If bearish, then price needs to go up first, right? That is what we have determined. This is true. This is how a bearish candle is naturally formed in organic point of state. Let's see if anyone else is trying to join. Okay, cool. We are good. We are good. All right. So this area right here is currently where gold is right now, right? Why? Because The monthly opened up a few weeks ago. The monthly opened up here. It's creating this high. If you're in a bullish market, if you understand that bullish is market in the overall sense, then you will understand that the push up is just for the candle to create its wick. And then it's going to continue down to create the body and then close. If I show you that in the chart on the monthly, what can we see? Right? Gold opened up here. It pushed up. And now it's continued to create a body. You can apply this understanding in all the candles on the monthly, weekly time frame, and I will show you some more examples later. But I just wanted to give you a brief rundown of why gold is doing this move up, right? For example, one more, and then we'll go into some other stuff, right? Gold found some type of support at this level here, right? Gold also then broke out right here. So with the basic understanding that gold is bullish, the following week, you should expect something down. So what I told you here is that if bearish, then price needs to go up first. What does that mean for the bullish side? That means if you're bullish, price needs to open, go down first, and then go up. So you might be also wondering when you're trading, it's like, oh, damn, I'm bullish, but why the fuck did it just drop down this much? This is why, right? This is your understanding that the organic creation of a candle is that if you're up, you need to go down. If you're down, you need to go up. Same with all of these bullish candles, right? You're bullish, price opens up. This price didn't do anything. It's just a pause in the market because it found some type of resistance here. Most definitely, this is on a lower time frame breakout level or an HNS level that price is just rejecting to find more support at this level here, right? But in that understanding is if you know that if you're bullish, prices go down and then go up, right? So something for you to consider, something for you to identify and observe whenever you're in a doubtful state. Let's go over what happened very quickly. I'm going to delete this. All right, when you watch the video again, screenshot it, put it in your own notes, and then draw the bullish example of this right here, okay? Very important for you to remember. Okay, so here, what you see is price is still rejecting this weekly level. Going to the daily, price can be confirmed that it's rejecting this weekly level. And now we also have a bunch of other gap levels that price is rejecting. Why this gap, for example, I'm selling from up here, by the way, but this gap is like we have studied is we have a rejection of an overall bigger level. And then the lower time frame created more forms of resistance that price needs to respect before it goes up, right? So if daily can't push up to the weekly level, what makes you think the other time frame is going to do that, right? This level has already been rejected and it broke out multiple forms of resistance. I mean, support right here, support. It also broke this support. You might be wondering, well, sir, like this is the one that's been respected, but we will go on over this understanding in the future and why I just put those levels. But another hint and detail that you want to remember: price still broke out, right? And coming from a rejection zone. This gap level, we already know that we like to trade from open closed candles that have been rejected towards the direction that we like to see it going. So what we see is price rejected this level, open, close, rejection with the bearish candle. A lot of examples I've seen during the homework and people asking the question is, well, what happens if this is a bullish candle? That is lower probability of our understanding of gaps. We want to focus on this view. And yes, you can trade from higher time frame gaps. These are the things that you want to focus on, right? If you don't feel comfortable entering from the daily gap, then you will have to use multi-time frame analysis. Okay, so you pull it down to H4, you leave this daily level, and then you find other levels within this range, right? So we can identify a couple of SNR levels primarily. And open up this gap right here. And I believe there was also one on H1. Is your HNS level here. You want to begin applying multi-time frame to your understanding that yes, price did push up. It didn't just come to the daily level right here and then go down. It needs to complete and create a storyline within the lower time frames first, right? It needs to find support and resistance in the lower time frame for, so you see H1 is pushing up on the H1 time frame. H1 needs to become bearish first for daily, for H4, for weekly to go bearish. If H1 is bullish, how can the other bigger time frames go bearish, right? So what do you see? This is the daily level. I'm going to clear this one out and just focus on this H1 level real quick because I feel like if you guys understand this right here, then you'll be able to filter out a lot of the SNR levels that you're drawing out. You ask yourself like, why isn't these SNR levels being respected or not? But if you can just follow with me, then you will have a better, more comfortable understanding of what I'm trying to say. Okay, so we understand that daily H4 can't go bearish until H1 goes bearish. The whole way through, it's pushing up, but we already anticipate this daily level to give us this push down because why? So going back to the daily, we have an open close with a rejection. So we like to see that, and we have a rejection from the weekly level, right? So we need H1 to be aligned with the daily level, daily time frame. How can we do that? You look for breakout, right? So you have this, we also have this. I don't want to mark this out. I don't think it's fresh, but it's still a SNR level and you see it being respected. But for this example, actually, yeah, let's do that. Because most of the time this will be fresh. And it doesn't matter if it's not fresh. You just see that it's rejecting it and we'd like to see it be fresh, but it doesn't need to be fresh. We cannot fight the market. We just are presented with what we are given. I mean, we trade what we are presented and we're given opportunities. Okay, so we want to see a bearish breakout. Where is your bearish breakout? We understand that this is a breakout. Why? Because it's a gap level that's been broken up. Very simple. If you want more, if you need more evidence of that, you don't need to, but for those who don't understand it, you can go to a lower time frame. And what do you see? This is actually a doji candle, but also if you pull your line chart, it is a support. that's been broken. Okay, so if we go back into H1, it gets broken. And then what happens? Price comes back up to test level. That's what we're finding. Price came up and tested our level. Then price also broke down many more gap levels. We go into H4, you also wonder like, damn, well, uh, there's so many gaps that's been broken. Where do I focus, right? Check this example, check this logic out, and check this reasoning out, right? We have already determined that this is an H1 resistance level, right? What you want to do is identify a new term called decision level. Right? The decision level is the SNR or the gap that caused price to go up and test this level. So let's put that in writing. Is the decision level is the last SNR or gap that pushed into our key level. You want to see if price is going to respect this decision level or it's going to break it. We see a break here, right? So you want to use this as your point of invalidation and validation on this time frame. The break of this gap can confirm that you can begin seeing lower pricing, right? Because why? Let me show you something else, right? This move up right here, all these opening close, actually they've been respected the whole time up, right? Open close, open close rejection, open close rejection, open close rejection. Then price found support, resistance up here, and then it gave us this breakout of this level, right? What we also like to see is then price confirming this breakout. So then it confirmed it with the retest. Unfortunately, it didn't come back all the way up here, but I actually entered a position here as well because price came back up. If you see this, I think this is news because I mean this is actually a very ugly candle. Most likely it's driven by some type of news alert. But nevertheless, what you see from this, what you can observe from this candle is that we had a breakout here and price confirmed this gap level and also this gap level and also this gap level. So then you start to, you can, I don't want to overwhelm you, but then you can observe the reaction here and the reaction here. And what you do at that point is you pull trend lines. This is the perfect segue for us to understand and begin talking about our beloved trend line, right? My entry came in just like that. When you bring your trend lines into the picture and you have your key levels, you want to see the relationship of your trend line and what it does at your decision level. And you see price rejected my decision level and it rejected my trend line. And that's where I began lining up my orders. Okay. I'm going to send in a screenshot of that so you guys don't think I'm bullshitting you. One moment. Okay. So actually this top one, I got in here, I left my SL open and I was asleep and this happened. So my ass was a little bit saved when I I was lucky. for this rejection, but then what I just explained was this entry right here, right? Right here. Watch this video a couple times, watch this, and try to replicate this understanding. That was a little bit of the multi-time frame knowledge that we're going to dive into next week. But today is trend lines. And if I am to give you some confidence, if you feel comfortable with identifying some basic SNR patterns or levels, if you feel comfortable with identifying the gaps, and if you feel like you're a little bit comfortable with doing the multi-time frame analysis, after you learn the trend lines today, I want you to begin taking trades in the live market, whether it may be demo or a small account or however you want to do it, even if it's forward testing on TradingView, please begin doing that because you want to get into the habit of spotting your levels and then taking the setup. And then through natural progression, you're going to be able to make calculated decisions even on the H1, H4 timeframes. You won't need the lower timeframes for confirmation. A lot of you guys, I'm going to scroll on a little bit of the FNC algo community real quick, because what happens is I have a couple students who try to mix algo-based ideologies with SNR techniques, but I don't recommend it. You can do it, but the whole point of this mentorship is for you to simplify your trading. So when it does come to making decisions in the market, you don't have to exhaust your mental capacity in doing an analysis. If you're just focused on multi-time frame, SNR, and trend lines, you have a less variables to objectify, right? If you use SNC with SNR, you're just complicating things for yourself even more. You're adding the understanding of liquidity, the understanding of inducement, the understanding of equal lows, equal highs, buy side, sell side, fair value gap. I mean, optimal trade. You're going to just, my mind is being blown already in a bad way, just for me even thinking about that. So when you begin practicing the SNR stuff and you see my setup, a lot of them are yesterday's slide that I will also go over in a little bit. It came from the daily time frame, right? It came from this point in time, and the entry was literally pinpoint precise, right? And it's just like that. I didn't need any other confirmation in any other time frame. A lot of my entries up here all came from H1, H4. I don't go, you can see my trading view, I don't go below M15. And only time I go at M15 is when I enter a trade from a key level. For example, just say, for example, I go, well, actually, let's do the one that I got here. The only time is I want to see, for example, I got into this top right here. Let's just say that happened. And it did happen, but I will go on to M15 if I am uncertain and I'm doubtful that because I got this entry from a higher time frame, I want to see the M15 breakout, right? And if I miss that higher time frame one, M15 can allow this re-entry, but it's not necessary if you can play a higher time frame picture. So again, when you begin applying SNR gaps and trend lines together, I want you guys to build that confidence. So when you do see your setup, then you won't really need to go below once again, all right? Okay, great. Secure some profit position. Okay, great. So trend line. are going to be your best friend in within the next few weeks. Um, Next week there's not going to be a class actually because I want you guys to focus on putting SNR, gaps, and trend lines together so then you can begin to do small reactionary trades and then you guys can build more confidence in seeing the setup. Um, I know this is a fairly big group. A lot of people are moving much quicker than others. A lot of people need some more time. That's completely fine. That's the whole part of mentorship. We help each other, and if you have a lack of understanding for something, we're all here for you. If I'm not active in the group chat, there's always going to be someone there to help you. So that's the whole point. Me personally, I like learning by myself. I've always learned by myself. I'd rather watch a video and hear someone just talk for hours than actually be interactive with people. But I'm weird like that. So even me teaching you guys, it's me stepping out of my comfort zone and just constantly putting myself in this position where I have to be just vigilant. I have to be more aware and stuff like that. So it's more practice for me and it's more practice for you as well. Okay. So trend line. What we know about trend lines is that for our strategy and our approach is it will help us determine direction and two, it will give us points of entry. Trend line in our approach is not going to be used like the traditional uh, retail or YouTube concept approach, right? We don't use trend lines. I mean, you can just for a reference point, you can do stuff like that and create a channel and do it that way. But you're going to drive yourself crazy, right? Because you have a lot of channels here. There's a lot of you can do this one and then you can also do uh this one. You can also do this one and say that this is all big channel, right? So we don't want to do it that way. It brings in too much variables and we like to keep things simple, right? So we have from the PDF, if I'm correct, we have 5 different trend lines. Scales, and we also have something called also uh, the X or boom point or crossing point, whatever you want to call it. We'll learn this. If we have time today, I will explain this, but there's a separate discussion for this. This is more advanced stuff. Um, Not crazy advanced, but in the PDF there is some notes on it. Um, but today we're gonna do 5 scales, okay? With trend lines, I want to ask you guys something. Can someone tell me out of 1, 2, or 3, which trend line we'd like to focus on?
Maybe first one.
Yes, correct. We want to focus on the first one right here. Specifically, H1 and below. This is equal spacing or near perfect equal spacing. So H1 and below, we want perfect or nearly perfect spacing. For these trend lines, H4 and above can use. The spacing can be irregular. It doesn't need to be perfect because H4 daily, weekly trend lines are more powerful. There's a lot of force between the connection of 2 points already coming from them. So later you will learn how you could use daily, weekly H4 trend lines and combine them with H1 trend lines. That is a rule. You want to focus on equal spacing on H1 and below. H4 and above can use these. It would be nice to see also H4 and above with this, but it's not necessary. So let's go into our test real quick. We have TL1. We have point 1, point 2, entry graph point 3. There's that, or you get it. This is TL1. It's just a continuational jab of right here, right here, and right here. This is bearish, bullish can be drawn, right? Or actually, bullish can be drawn this way. Uh, Something like that. It's kind of like a divergent trend line. It's kind of like a continuation trend line, however you want to determine it. It's just the connection of two candles, body closures, going in the same direction. Okay, so we're gonna go over some examples of that in conjunction with SNR. I'm gonna there's this in the notes, but just remember that H1 and below we like to keep it perfectly spaced or near perfect. H1 and above, H4 daily, weekly, this can be used. So we like this right here. This is the perfect month. Okay, so I'm going to start. Let's go over some examples for trend line 1. Actually, we can go on page 1. All right. Let's see something here. You have, don't worry about this. Don't worry about this. I just want to give you the basic view, okay? You have point 1, point 2, and 3. And then your SNR can be the gap level or actually can do that. But you see that price cross into your SNR trend line. So anywhere around is your entry point. anyone have any questions so far?
Yeah, okay. Hello.
Yo,
Robbie,
what's
we
up?
can also consider that small one also, right?
So what?
That SNR level. In between, we have a small SNR, right? You marked above one. This one, this one. 1 minute. This one. Can we consider this as a second touch?
No, okay, okay. Oh, good question. Good question. So with trend lines, remember this rule. With trend lines, always, 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 you want the first two touches to be at the closing price of the candle. Okay, no wick.
Okay.
Okay, always, always body closures. Always, 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 always. You can't be a body right here and then a wick. If the wick touches it, fine, that's okay, no problem. But you make sure that the body of the second tap is also there too. And the third tap is usually in form of a wick. So let's go over some more examples of TR1. So do that, do that. So we have it's right here. Body, wick.
Sir,
You have,
sir. I have a question.
excuse me?
Hello, sir.
Yo,
Sir, I have a question. For the
yes,
second
yes.
point, we did the fresh body candle. That
No.
that
It doesn't have
that
to be fresh. It doesn't have to be fresh. It can, so let's go over some detail here. All this wick touches here, no problem. No problem. This right here, no problem. You just need to focus and connect your points at this point right here. Your entry is gonna come right there.
Rob, I have a question.
Yes.
From the first touch and the second touch, the candle needs to be the same color.
No, that doesn't matter. But that's a great question, Albert. Um, Soon when you have the practice, you will understand why some of that if this was bearish, you'll understand why it's important. For now, it's not important, but it is. And just for so if we put that into perspective, this is resistance, this is resistance. We can determine that. Why? Because it's rejecting with a bullish candle. Rejection. Third tap we want to see sell down. Let's look at this price action real quick. I hope this is going to help you understand something. So you see how this is support, bearish. It breaks out support, and then it taps our support, turns into resistance. It's like a dynamic support and resistance, angled support and resistance. That is a very good question. That is advanced question, and you will soon have the reasons. You will learn just from practice why the closures of each candle can be important. Doesn't mean that you cannot take this trade if it closed bullish, but you will understand, you will be able to filter your trend lines with that understanding. Before actually, it's a side story. When I was learning from my mentors, I had the same question, and then I started asking that, and then they were very surprised to see that yes, it actually does play a role. I did not expect that from you, so you can also consider that too in the future. Everyone can do that too. When you do learn the basic view of all the trend lines and the basic understanding of what each look is, then you'll also, because we have 5 different trend lines, you'll also have different reasons to use them in different cases. You'll have TL4, TL5 is good for reversal, TL1 is good for continuation, TL2 and 6 is good for breakout, TL4 is good for reversal. You'll learn that those trend lines are good for different scenarios. And yeah, that was a tremendous question though. So you can also consider that as a factor in filtering. And when you do the homework, you will also use that understanding to pull your trend line. I don't want to confuse anyone just yet, but that is that is part of some of the advanced knowledge that we will also cover in a short time we start with. So moving on, the question is TL1, tap 1 at the body, tap 2 at the body, and then you enter at the wick. Let's see. More examples.
Sir, I have a question.
What's up, Leo?
In the third touch, just we need to entry.
Yes.
That's all.
That's it.
We
Mhm.
don't need to wait any confirmation. Like
No. That is your confirmation.
that is the top of the we need the
Yeah.
finish content or just
Yeah.
top of the week.
Exactly. Just there's two points. Good question. There's two things that you consider, right? So for this guy, I will identify this SNR level, broken HNS. I'll also identify this one as well. Or no. That exactly. Correct. So what you see is price broke out the SNR level right there. Broke out. And then you can see the whole time right here, we're bearish, price broke a decision level. And then it tested our trend line. So to answer Albert's question again with another example, you see that this is a resistance in a bullish candle. This is a resistance in a bullish candle. The resistance was broken, and it's testing it. Okay. In the live market, when you see this candle being formed, it opens here. You understand what I told you guys in the beginning, right? You are bullish, so price is going to open, low, rejection, high, and then close. Yeah, makes sense.
Yes.
Probably not, but it's probably blowing your brains a little bit too. I want you, I want you guys to be mind blown. because this stuff is fucking precise. It's like a ninja samurai shit, bro. Okay, moving on. Good question, Leo.
Rob, I have a question, bro.
What's good?
Bro, when we draw trend lines, the first and
Yeah.
the second point has to be the engulfings before the third point.
Okay. It doesn't need to be engulfing, but that's a good observation. A really good observation. And now that you mention it, yes, you will see that happen majority of the time. I would say. I can confidently say that majority of the time it is in some form of a engulfing look, right? This is one of the trend lines as well. Not the best one, but it is, and it also is engulfed. But yeah, like it's pretty much like body. The point in point 1 and 2 is going to be coming from like two. Yeah, exactly. It's going to be like that. It's going to be like two opposite closures of a candle that creates the point. So it's going to usually come in form of a V shape or excuse me, a V shape or an A shape. And your point will be at the body of that. But yeah, that was a good question because you can identify these points always in form of a engulfing look. So a good observation by you, Jim.
Thank you, bro.
No problem. You guys are asking some very good questions, man. Did not expect that. So well done. Okay, moving on. So TL1. Let's see, what can we see? Look at this guy right here. This is point 1, point 2, entry anywhere around here. Our SNR level. Okay. So it's clear. Yeah.
Hello.
Yeah. Yo.
Sir, I have a question about trend line. Like
Yes.
when we get two body closer, so we can
Yes.
connect and make trend line. After that, we can how much time we can use it the trend line? Like 1 time, 2 time.
Good question. I want to say I don't want to give a number, and there shouldn't be a number, but
Okay.
trend lines also give us it's like a in our sense is rejection. We want to see the rejection of the trend line. So as long as the trend line is being rejected, it can do this, no problem. It can jab 1 time, 2 times, but if you can, that's like your last form of you could also use that as your last line of defense, right?
Okay.
So it can do this. You will have multiple scenarios where many scenarios where this will happen, right? Like this one right here.
Sir, I have another question. Like
Yes,
when
go
we
ahead.
mark a trend line like this, okay? So first touch our is here, and when we connect a trend line, so we got I got some scenarios like body closer little bit above our trend
Yes.
line. So is it a valid or invalid trend line?
I have to say that is invalid because if I'm going to teach this way, I have to stick to this way. This is the way that I was taught. Yeah, Amiri, that is actually not valid. You want to connect it. If you focus on more of the precision, then you're starting to create rules for yourself.
Yes,
you know?
yes. Right. Yeah.
So no more subjectivity because before when we used trend lines, there was a lot of subjectivity. Like we did not, sometimes you can use wick to body, body to wick. If we follow these rules, then the system will reward you from following the rules. Okay?
Yeah, correct,
Yeah.
correct, sir. Thank you so much, sir.
No problem, buddy. Good question, good question. Okay, so you can see just like how this example, this question of it being tested multiple times. Yeah, we can do that right here. Point 1, point 2, test, test, test. This is hold. This is also, okay, let's just see. Okay. You enter at this first point right here. You use a 20-point stop loss right there. Okay.
One doubt, after rejection only we need to enter, or else on third touch we can enter directly.
Yeah. Okay. So if you have balls, then you can just enter just based off the understanding of direction, you can just enter as soon as it touches your trend line. But what some people do, there's two ways. So you could do just immediate tap of your trend line, or you could just do when it's rejecting it, slowly falling, then you start lining your orders up. So that's why also you see people doing this, right? Because instead of putting one whole big position at the jab of your trend line, you sometimes will, this is exactly why we do it, but you sometimes will enter at this one and full position, but then you will incur some drawdown with this push up. So that's why you see me sometimes, I'll put my entries at the top of the trend line, and then you'll see sometimes it will just do that as well. It can do that, and it's okay, because as long as your trend line is being rejected, you're good. So as I was saying, you got into this entry right here. You see, you have a point, you have a stop loss here. So in your mind, you're saying, okay, that's the reason why price is going to take me out. But now you also have another reason. If you see price close above your trend line, you close your trade. That means your trend line is not valid anymore, and it's not holding price. So instead of going out right here, you go out right here. Make sense? It's a risk management. This is like a risk management tool you could use per se. Okay, so moving forward, anyone have any questions with TL1? Just the basic look of it, you guys understand, no?
What?
Yeah. Do you guys have the basic look of TL1? Do you
Yeah,
guys
I think
understand
Yes.
what
TL1 is good. It's all good.
TL1's good? Okay. So again, Albert, bearish closure,
Hey, bro.
bearish. Yes.
Can you hear me?
Yeah, Richard, I can hear you.
Awesome. Is 20 pips your standard SL that we use?
Yes, good question. H1 and below is 20 pips. H1 below is 20 pips. H1 above, I like to do 25 to 30 pips.
Bro, but we need to
Awesome.
calculate that spread also, right?
Excuse me?
Actually, we need to calculate that spread also, right?
I don't really. I mean, spread can be annoying sometimes when you see that because of spread, you'll come across that issue in the live market where your spread is touching your trend line, and that's not like where you want to enter. But then you get sometimes when you see my screenshots, bro. I worry about I'm like super nitpicky, and I'm very, very precise with my shit. But sometimes like the spread is gonna touch my trend line, and then my entry comes in like right here, and I get mad, bro. I get furious because I want to show people, and I want to see it for myself that my entry came above right here. So what happens is my entry, it's kind of immature, but whatever. You're gonna see like my entry right here, like right coming over here. But I actually wanted to come over here because of spread. It's something that you can't really avoid. You can't have no control over it because gold has some type of spread in it always in any broker. So yeah, you can consider the spread, but if you just follow the fact that your price is rejecting a trend line, even if you get up here, no problem, no problem. It happens,
Um,
it's going to happen, but try to focus on the entries that so what's your
bro,
SNR? Yes, go ahead.
bro, I have a question.
Yep, go ahead.
Bro, does trendline one comes from specific type of SNR, or it comes from every SNR levels?
Okay. Let me go over a rule that I actually didn't go over. Okay. So if you are selling third point must above the okay. Third point must come above it. If you are buying, third point must come below the level. That is the rule that you must follow. So if I can show you what I mean. Right here is your SNR, classic SNR. Miss becomes fresh. If you're buying, price needs to jab into your SNR first. So a lot of people in many communities, they just enter right here and they experience this drawdown. But we like to pull the trend line and enter here so we can reduce our trend line. I mean our drawdown. That is why this just really is going to save you from this drawdown. Entering as prices rejecting your SNR and your trend line, you start lining up here. There's no specific rule in your question, but this is the only one that you should follow. That if you're buying, price should be below your SNR, and if you're selling, so let's see, classic, so selling SNR and time frame. So you're selling, price needs to jab into your SNR, and your entry comes from the trend line. Make sense?
Yes, bro, got it.
Cool. All right. Let's go into trend line number 2. I just gotta remember. Trend line number 6 and 2 are very similar to each other. I just gotta figure out the point. I just know the way they work. I don't remember names anymore. Trend line 2 is support system. Support, yeah, I'm sorry. Okay. Support resistance. Trend line 2 is 1, 2, break of support, and then resistance. right? So for this example, let's see. Okay, yeah, let's do that. Do that. You want to sell here at this point. Say, for example, this is your breakout SNR, right? What you want to see is price reject your SNR level, and then your entry comes in here. So this candle is just pushed up right here. Reject SNR, reject trend line entry from the middle thing. So, okay. Again, this is body close, 0.1, 0.2, entry, 0.3. So let's look at that. Let's find some examples of T2. Point 1, point 2, point 3. Your gap, SNR, it's right there. Your entry. Okay. Support, break, support, resistance, back. Okay. Some more examples. Hello? Yep. Anyone there? Yep. Okay. All right. Let's see.
Sure. I have a
You
question.
got, what's up, Leo?
You said last time if the gap, we need the first touch is bearish, right?
Yeah. Don't worry about that. It's okay. Don't worry about that. Let's focus more on the basic book first. Don't confuse yourself.
Okay. Thank you, sir.
Yes, sir. No problem. All right. Let's continue moving on. So this is trend line number 2, 0.1, 0.2, break, out. Okay. Go. More examples. Next, oh, I think this one I had. This gives you a little bit. Let me see how much got on this. It's about. It's not crazy. Not crazy. Not bad. That's still a valid trend line. Support, breakout, resistance. Yeah, exactly. So you want to respect this one. So you have to see if you could find a trend line that goes above here. When that happens, let me see this one real quick actually. You would use this one actually, because it's above your do you see what I'm doing here? When you have the different types in your head, you can start filtering them to pull this one. This is T1, 1, 2, 3, SNR, respect, trend line respect, drop. Next one.
Rob, in this
What's
scenario,
up, Chris?
yeah, can't we draw the trend line something like this from bottom to top?
Yeah, of course.
Okay, there is no rule as such, right? Okay.
No. You just want to make sure that again your entry is coming above your SNR yourself.
Okay.
But you can do this 100%.
Okay. Okay. Thanks, sir.
No problem. No problem. Okay. Hey,
Can we
what's
take
up?
can we take a trade without trend line? Actually, each time
Uh,
we don't have.
I don't like to take trend entry without trend line. Just because most of the time these SNR levels with gold, you're not just going to get a very clean respect of a level. So these wicks right here is how we can, with the trend lines is how we could handle these wicks. You know what I mean? Like right here.
Yeah. Okay. No, understand.
You
Okay.
know,
Thank
instead of entering from this classic SNR, you wait for price to come into your trend line instead. I mean your SNR. So you see fresh classic SNR, miss, trend line, respect, and you enter here. You understand?
Rob,
Hey,
hello. Hi. So what I'm seeing here is that you are very selective with your level.
Yes.
You need the trend line, which is according to your level, to be like to confirm that your level is valid, as long as
Yeah.
the trend line is there. You
Yeah.
get what I mean?
Yeah. When you trade, so it could be a little overwhelming now when you see that at this point right here. But when you are analyzing the market at current market price, there's only going to be one or two trend lines that you can actually pull. And like you can begin filtering your trend lines as well when your simple rule is that you want to sell. If you want to sell above this point, and this is the only trend line that I see in this point in time that respects that rule. Makes sense? Hello.
Yeah.
Makes sense?
Makes sense.
Okay,
Yeah.
cool. Excellent. All right, so moving forward, let's do some more breakout examples. I want to make sure you guys get enough of that so we can view and practice. Cool. And gold is sideways left. All right, breakout trend line. What you see is the support, break, resistance. You can use
Break
this
is
here.
allowed.
No, second. Yeah, love it. Okay, so one other thing. When you guys start, I know a lot of people after today are going to go into their MC5 starting Monday. They're going to study in the weekend. They're going to start trading live. That's fine. You can do that. Yeah, you can do that too. I want you guys, if you're going to trade live or you're going to backtest live, okay, you do 1-to-1, 1-to-1.5. 20 pips. Okay, build the confidence in getting these entries right here. And try to see how many times you could get these in a row. So one right there. What you can do to manage this risk, this trade is once you achieve 20 pips, you can take off a majority of your trade. Give yourself partial. This is a brain mental hack for you guys. Remember this mental hack right here. When you day trade, you guys ever experience that feeling where you are say you got this buy right here. It doesn't matter your entry. Let's just say you're buying right here. You guys ever come into a situation where you're in profit? Say you're up 1 to 2, 1 to 3, whatever. You're in profit, and you're unsure of how far it's gonna go, but you still want to hold. You ever just like let your trade broaden without taking any partials, and then experience this happening? I'm pretty sure it happens to everyone, right?
Yes,
Where
bro, every day.
you're in this much, and then it takes all your profit out. I'm gonna give you a brain hack right now, right? In day trading, if you're gonna trade with me, you must pay yourself. If you don't pay yourself, I cannot respect you, because we're here to make money. Before you take the trade, you tell your brain already that before you even enter this trade, you're going to take partial already in anticipation that you're going to take partial. Because when it comes time for you to take the partial, you're not going to hesitate. Because when you think about it, like, oh, I'm in profit, and you want to leave your full position, and the thought of you cutting your position down a little bit, it gives you a weird feeling in your stomach, like, oh, no, I'm gonna hold it, right? But now you have this knowledge, is that this is psychology right here, guys, at its best. Before you even enter this trade, you already tell yourself that I'm going to pay myself something, regardless. 20%, 30%, it doesn't matter. You have to pay yourself. My mentors, Arif, 411, Afiq, all these guys, when you see their screenshots, yeah, it looks really nice, but they're still paying themselves, right? They might hide their entry position size. They do that for a reason, right? Because my mentors, okay, they enter full position, 20 lot, 10 lot, 30 lot, 5 lot, doesn't matter. When they reach 20 pips, they take off 70% of their position already. So if you guys ever seen Deer the Gold Digger, or if you've seen other big dogs, they put like 70 lots in their position. When they reach 20 pips, 30 pips, they're taking off a huge amount. That's why they do. This is also another brain hack. That's why we trust our setups, and we put not 1%, we do full margin, or you do 80%, half, 50%, 20% here. And then when you reach this, you take off half of your position, you let the rest run. So you pay yourself. This is how you actually, this is how you become a day trader, a professional day trader, because there is no guarantee that the market's going to keep going, like what happens here. There's no guarantee. We are here to make the money, take the money, extract the profits based off our edge. That's it. There's no hope that you have that I can give you as a mentor, as a day trader myself, to say that there is actually like a holy grail. There's nothing like that. There's nothing in the market that's ever going to exist. The market is ever changing. SMC, SNR, supply and demand, indicators, patterns, double bottoms, double tops, all that stuff is going to eventually dissipate, and the market is still going to exist. The market doesn't care about our strategy. The market does whatever it's supposed to do. So if we respect the market and say that if we're in profit, we have to be thankful for this and move on to the next trade. Give yourself 20. That's why I say do the 1-to-1 right here, because your probability of success increases drastically if you target not 1 to 5, but if you target this right here, you are a winner. But if you try to do 1 to 5, your 1 to 5 never gets hit, and you get fucked. right? So you want to be mature and respectful and go for smaller targets because these setups are going to happen every single day. You're going to get at least 2 setups per day. And when you understand and practice these setups, then you will learn that you only need 1 or 2 because you're going to put sides here, a lot of sides here, 2, 3, 4, 5%, whatever. And, you know, you're going to pay yourself respectfully. And the only reason you see my watch list, I only trade gold because on average, gold is moving 80 to 300 pips per day. I mean, if you guys even look on the range that we're in, even you're still capable of capturing. I'm in this buy right here. I am in this sell right here. That's 100 pips right there. Done. You're done. You're done. If you put 2 or 3% here, 100 pips, bro, that's great. That's great. And you only see me posting 1 or 2 trades per day. But you could take this trade right here. You could take this trade. Excuse my language, by the way. But it makes it more exciting if I curse. Yeah, like that's why we trade gold, and that's why we trade with this approach, right? The risk management approach, excuse me. Okay, so let's go over some more trend lines. Sorry guys, but I felt like I had to share that with you guys. Pay yourself at 20 pips, no matter what it is.
Rob, I have a question.
What's good, bro?
How to know this is a valid trend line? We need to combine SNR and direction, or
Yes, yes. So you need SNR for your trade. You need to find why price is going there, like this classic SNR. Let's see where is our trend line for this one. I can
and how many trend line we need? 2 or 3
one.
or this one?
Good question. Good question. Just one. Just one is enough. But when you
Like
have
if we have 2 trend line in the same area, is good or no?
oh, okay. Good question. So this is a sell example. I want you to, because this is a resistance right here, you're anticipating a reversal, or because this is a resistance, you can start filtering your sense in which trend line to use, right? This could be either something like this, trend line above, like a TL1, or you could say that this was a breakout here. So a breakout, you can look for TL2. Like there is, you will naturally learn which one to use. For this one, you have also this. So to answer your question, when you have 2 or 3 trend lines, this one is a good example because you actually have them crossing together above your SNR. That is even more powerful. That gives you more confidence that you can see right here. I'm pulling these trend lines respectfully. Let me just make sure. Oh yeah, that's right. That's right. It's 0.1 H4 time frame, right? So you can use irregular spacing. This is 0.1, 0.2, and 0.3 is entry, and then you have 0.1, 0.2, 0.3. you can see price doesn't close above either of them. They're crossing. That is the X trend line. Okay. You could use the X trend line in the same time frame. You can also use pull one trend line from H4 and then another from H1. When they cross together at your SNR level, you get this type of result. Straight shot down. Okay, and after you guys get comfortable with trend lines, we're going to learn signs of continuation, and we're going to use time and closing prices to determine how far we can hold the price. Right? So just a basic hint. It's actually advanced, but I'm going to give you the hint right now. Is that this was the breakout right here. The price respected your trend line. Price broke this level. So you're bearish. Then to manage this trade, you have to find the next form of support. Again, advanced knowledge right here, but if you watch this video a few times and then start applying this, there's an explanation that I'm going to give you, but the visual
Sorry,
representation
Rob.
of what I'm. Go ahead.
To be more confident, can we use like the SNR here for breakout?
For
no?
breakout, okay, let's go over this bit of action.
To be more confident.
Let's go over this right here. Let's see how you can take advantage of this. This is H4 trend line, H4 time frame, right? Okay. So you have a fresh classic SNR right here. You don't feel confident going on the. You also even have a trend line here as well. Entry up here. Fine. If you don't want to enter from H4, let's look at the anticipation that price is going to respect this and then give us a breakout. So let's go into H1. Let's see. All right, what do we have here? Okay. We have shoulder, head, and we have a breakout of this level. Oh, it's perfectly even at our H. It's even at our H4 classic level. This is how you use multi-time frame analysis. You pull your higher time frame levels, and then when you move down a time frame, you try to line them up with lower time frame.
Yes,
SNR.
powerful.
You feel me? So you pull your trend line like this. Let me bring back the other trend lines real quick. Where is that? Where is that guy? That's the one.
Rob, H4 trend line is most powerful
H4 trend line is more powerful because it's H4. And if you can find H4 trend line, so where is that actually? I gotta make sure I got this right.
and we can use this to find a direction of weekly or H4 trend line.
Yes. That can help you. The rejection of the H4 is very good for determining that kind of price action. Let me find that trend line one more time real quick. This was your question, so it can help you. Right here. And if I go into H1, perfect, bro. Fuck, that's so sharp, man. You see that H4 trend line? H1 trend line is crossing. that is your entry, bro. That is so fucking pretty, man. That's art right there. That's fucking art. Like the fact that you have H4 trend line, H1 trend line crossing, respecting your SNR drop all the way. We don't know why. I don't know. I can't give you a reason, guys. Like why this works, bro. I don't care. I just know that it works because I practiced so many times. It works. So yeah, again, H4 trend line crossing into H1. This is our H4 level right here, matching up, lining up with H1 level, and then drop. Okay, so moving on, we have a lot more to cover. And this is gonna be a big session. All right, so that is breakout trend line. We're going to actually skip in the PDF. Trend line 3 is we're gonna go over it, but we're not going to use it now. Trend line 3 is kind of like what you see BS was saying with using it for direction. What you can do with trend line 3 is draw out stuff like that. Trend line 3 is pretty much just an overall directional trend line. And something like this right here. The overall ranges. But we don't really want to use, I mean, you can understand that, but if you have SNR already in the back of your mind, you don't need this one. You don't need it. But you can. And that's why I'm not going to teach it, but you can use it. Self-explanatory, right? This is resistance. Okay. So trend line 4. Can someone erase this? I don't know who drew this, but thank you. All right. Trend line number 4. Very powerful. Very powerful. It's good for reversal. Okay. This is resistance, support, resistance. It's kind of like what you call it? Head and shoulders trend line. Some people call it a reversal trend line. Whatever you want to call it. It's just when price excuse me, sorry about that. Resistance, support, resistance, or support. So you can see based off this diagram that this is a shoulder level, the head, the breakout, and the test right here. It's like a head and shoulders, right? It is support, resistance, support. Just like that. This one is resistance, support, support. This is a new trend line you've probably never seen in your life, but now you know. Okay. So look at that. You see resistance, support, resistance. You see yes or no?
Yes.
Okay, great, awesome. Then this looks
Like
something
a
more
like a HNS.
H&S. Correct, brother. Exactly. It's like a reversal also. Right. This one can use, little bit messy, but still can use. Yeah. Right. Use resistance, support, resistance. Okay. So more. Come. Da, 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 da. Resistance, support, resistance. SNR, HNS. Okay. Go.
Point 1 and 2, it has to be always in V and not gaps.
Say that again, brother.
No, I was asking when we draw the trend line, point 1, 2, 3, and on the third tab we take it, right? So
Yes.
the point 1 and 2, it has to be always the support and resistance A and V, or it can also be the gaps.
Oh, good point. No. It has to be only closing price of a body. So no
Okay.
gap, just
Okay.
the B or the
Okay.
yeah, you know what I mean.
Yeah. Got it. Thanks.
Good. Very good. So this is breakout. No. Okay. Let's go for 411. Let's see. No. This would have been a very nice sample to show. If price came down like this, it's 411. You have support, resistance, break, support, and the SNR is right here. Remember this example. Very good, very powerful for the turning of prices. This happens quite often with gold. Good idea. Sorry about that. Whoever drew that, you're very good. Sorry about that. I'm just too focused with the trend line. Thank you. Okay, moving forward. Let's go find some more of this trend line. Breakout. Well, breakout. Okay. Cool. And here, thing. For resistance. So this is breakout trend line. Not the cleanest one. Okay. 4141. Okay. No, but this is what is it? It's actually 26 minus 6 that we will go over. Okay. Is-
Rob,
yo,
you said this one will use on higher time frame, right?
yeah, you could. Oh shit! Thank you, bro. Oh boy. Yes, you can pull them on the higher time frame. Thank you for that. Okay. Good. Thanks for that. I want to focus on
Anytime,
H1
bro.
because most of your entries are gonna come from H1 or H4 interchangeably between the two. Okay. So that is the reason why I couldn't find indemnity. This is 411. Okay. You have resistance, support, resistance, drop. Yeah. SNR, I would like to say is right here. Yes. The rejection of SNR, rejection of trend line. Excellent. That's okay. And we have another one. Your resistance. Oh no, actually this is breakout trend breakout number 6, trend line number 6. Resistance, I mean support resistance. Okay. Okay, let's see what else, bro. Here is nothing. And I have a bunch of
Please
sorry
mute
about that.
your
Sorry about
mic,
that.
sir.
Oh yeah, I have a bunch of folders of examples for the trend lines that I'm gonna share with you guys. So don't worry if you don't pick it up entirely in the session. Just the basic examples that I'm showing you, the ones that I did show you, you could definitely learn from that. So I'm gonna go into trend line number 5.
We don't want you to do too much, bro. You're gonna do our homework for us.
Yeah, thank you, brother.
Yeah.
Cool. Yeah, thank you. Okay, so this is trend line number 5. And it's just another reversal type of trend line. You're going to use this trend line mainly at pivot points. And it's gonna come when you don't find trend line like this. And sometimes what happens is price is going to actually do this. And then it's going to respect this shoulder level. Or this is variation number 1. Variation number 2 is this. So the difference is between the two is the point 1 and 2 comes in between ahead. It could do first tap 1, 2, or second tap, 2 taps, and then 1. All right. I want to show you an example. I see one right away. Like I said, right? You want to, if you're going to sell, you want to connect it right here, but then sometimes the head comes in and you drop right. Okay. Perfect example. Go over some more. it. This is just T1. Yeah, so you have point 1, point 2, and 3, and point 3. This is the head. Oh, this is the head. T5. See this one, but I think it doesn't get affected.
Hello.
Yeah.
Sir,
Yo,
I
what's
thought
up?
that trend line invalid.
This one?
Yeah, because body closer above the trend line.
No. This is so this is what can I say? When I show you the diagram, this is okay, this can happen because you're using T5 trend line,
Okay.
T5 trend line. You could use that one. And good observation, brother, because yeah, you
Okay.
yeah. This is good. This is good. Okay. Yeah, good question, man. All right. T5 is resistance, head, resistance, and then intrusive. So you can even intrusive too. Okay. We're gonna do one more of these, and then we'll move into T6. So one head, two. So like I said in the beginning, this is good for like a reversal opposite side of a trade. That's exactly when you use this trend now.
Sorry, reversal after what?
It's good for like a reversal trade, or like the opposite direction trade. Like when you see that price is coming up to a form of SNR resistance, you clear the trend line to expect this type of movement. Same thing here. It's coming into your head and shoulders level. 0.1, 0.2, 0.3. Make sense? Okay. All right. So, E1. Anything? Oh yeah, this is also one. I think it's a little bit messy, but still valid. Actually no, let's use this one. Yeah, that's T1. Yeah, that's T1. All right. We'll go over T6 and here for the trend line. So breakout trend line number 2 is when we have the respect of a level happen before the breakout. So this is T2. This is T6. The respect of a trend line happens after the breakout twice. This is one. This is number 2. So we look at some examples of that. What you can see is something like so where is this quote? have resistance. Support, oh no, sorry, support, resistance, and then resistance. Resistance. Can also use this point. Actually, I like this one better. Support, resistance, resistance. They're both crossing together. So. Okay. Anything here? No. Support, resistance, resistance, entry right here. Entry right here. Anything here? No. Anything here? I think so. Let it touch this body. Yeah, anyway. Okay, so one other thing is you don't want to force trend line. You're gonna come you're gonna come across a situation sometimes where you feel like you can adjust it just to the point. I will be lenient with that. You can, all right. I'm not going to stop you from doing that. But don't force it too much. Like, it can be a little off, but this is too much off. Like you don't want to make the habit of saying that this is okay. You don't want to make that habit. Instead, you could use something like that. It's a little bit, I mean, yeah, it's a little bit shallow. There's definitely something else here too. Yeah. So your entry comes in. You see how there is like an X thing? You want to enter somewhere in this zone right here. So anywhere in between this area is where you can start entering yourself. The crossing of two trend lines. Very powerful. C6 is when the trend line gets respected twice after the breakout. Yeah. Let's see. Send it to you. Yeah, this is good. Resistance, breakout, support, support, buy.
Bro, can I ask a quick question?
What's up, bro?
So usually you mark your levels and then you draw your trend lines.
Exactly.
Do you always get your entry or sometimes you miss your entries?
Oh, I mean, I don't, yeah, of course, I missed some, but, I'm a little bit obsessive with the chart. So when I do my markup, I like to focus on higher time frame levels, and I usually am present for those moves. But generally speaking, yes, you will mark out your levels first, and then price is gonna come to, so this is your SNR level, and you see prices coming to it. You generally want to start pulling trend lines as coming up to your level. Again, we don't like to predict too much. We like to react more than we like to predict. You'll see, slowly learn that if you focus more on the bigger time frames, H4, H1, you'll have enough time to make a decision and pull your trend lines and do all the work you need for a decision, right? Yeah, so those are your trend lines. I think there's plenty of examples in this video. Your homework is going to be to do SNR plus TL combo setups. This is going to train your eye for entries. It's going to teach you how to do entry. And then can also do gap plus TL. Remember, the rule is if you're okay. If you're going to sell, TL should be above SNR. If you're going to buy, TL should be below. Not. Do 100 screenshots. If you want to do more, fine. But I want you guys to get used to seeing this. Is there any questions?
No from me.
Okay. Cool. So I'm going to end the recording now. And I want to make an announcement.